Okay, is everybody ready? A little more than 6.5 years ago, I stood in this room and sounded the alarm. Kentucky's Unemployment Insurance Trust Fund was about to run out of money. And that, at that point, was ground-shaking news. Since 1935, the federal state program had helped families put food on the table and keep a roof overhead even when mom and dad had lost their job. It was and is one of the most important safety nets we have in the Commonwealth. And at that time, in the middle of a recession that was crashing down on Kentucky and every other state in the nation, that program was particularly important. At the depths of the recession, Kentucky's unemployment rate spiked to 10.9%, and we suffered 21 straight months of double-digit unemployment. Our families were hurting, and they needed the UI fund to tide them over until the economy recovered. Fortunately, we had a temporary solution. Recognizing the plight of states around the country, the federal government would loan us money. Kentucky, like more than 30 other states, took out a line of credit. To keep the trust fund afloat and help our families survive, we wound up borrowing $972 million in the years after the recession. Today, we have some outstanding news. Kentucky has paid off that billion-dollar loan, and our trust fund has a positive balance for the first time since January 2009. This milestone demonstrates in clear terms that this critical fund is on the path to solvency. And this payoff carries a direct financial benefit for our businesses. A positive balance in the UI Trust Fund on November 10 of this year will ensure that Kentucky employers will not be subject to the additional credit reduction rate of 1.5% when they file their federal unemployment taxes in January 2016. The early payoff means employers will see a reduction in federal taxes of $165 million or $105 per employee. Now, what has changed? To appreciate where Kentucky is now, we have to go back and understand why the trust fund ran out of money to begin with. And there were two reasons. One was the global economic breakdown that cost numerous Kentuckians their jobs. It was the worst recession of our lifetimes. So more people were drawing unemployment. In December 2008 alone, we had over 87,000 initial claims filed, which was and remains the highest one-month total ever in Kentucky. The second reason the fund was hurting was an out-of-date rate structure for employers. It hadn't been changed in almost 3 decades. As a result, since 1999, Kentucky had been paying out each year more in unemployment benefits than it was taking in through employer contributions. Now, we have fixed both of those problems. First, as to the economy, after hitting bottom, our economy has shown incredible momentum. And as we previously described, we have more than recovered all of our losses. Our unemployment rate is down to 5.1%. An economic development incentives program we created in 2009 with the help of our legislature has helped recruit over $11.5 billion in new business investment to the Commonwealth. We finished first in the nation last year in large-scale economic development per capita, and our overall business investment was the highest in a single year since the state started keeping track of that number almost 30 years ago. So, our economy is back. Now, the other thing we did to preserve Kentucky's safety net for families was to reform the UI program. In March 2009, I created a bipartisan task force of leaders to take a hard look at our UI program to see what changes needed to be made to preserve its benefits over the long haul. The task force included 19 members from both the public and private sectors, representing both business and labor leaders. Ladies and gentlemen, some of the task force members are behind me. And I want to tell you one thing, I cannot praise the work of this task force enough. They stepped up and did an extremely hard job in a very tough time. It was a tough, complex, and sensitive situation. It was difficult on employers and employees alike, but this group of business and labor leaders in our state simply would not leave the table until they got this job done. They met 11 times. They participated in 5 topical sessions, and they were able to find consensus on a new rate structure. Now, they knew Kentucky had to do something. A do-nothing scenario would have triggered huge federally mandated tax increases as Kentucky began paying off our debt to the federal government. So we estimated back then that over time, the compromise that they came up with on this task force saved employers more than $450 million in federal tax and interest charges. Their report was issued in 2010, January of that year. It included 17 recommendations, which were the basis for 2 monumental pieces of legislation, House Bill 5, passed in 2010, and House Bill 495, passed in 2012. House Bill 5 allowed the UI Fund to gain a firm footing in the modern business world by bringing about structural balance to the system. We saw the result just 2 years later, in 2012, when contributions exceeded benefits. Let me draw your attention to this chart right over here on my right for a moment to really illustrate what went on. You notice that goes back all the way to 1999 and runs up to 2015. That top dotted line is the unemployment rate. And you notice how it was running along and then, of course, spiked when the recession hit us. The red line are the benefits we were paying out every year. The black line are the contributions from employers coming in. As I mentioned to you a minute ago, from 1999 all the way up to 2012, every year we were paying out in benefits more than we were bringing in contributions. So the spike in the unemployment rate in the recession was one cause for our problem. The other cause was that for years we had been paying out more than we were taking in because it had been about 3 decades since we had looked at how that balanced out between employer contributions and employee benefits. Then in 2012, we passed House Bill 495. That introduced a surcharge that was necessary to comply with federal law, which prohibits paying what's called Title 12 interest with UI contributions. Again, I want to thank the members of this task force. I want to thank the General Assembly who recognized the urgency of this situation. Today's news further solidifies the wisdom of our strategy. Now, a note of caution. The trust fund is indeed seeing a positive balance, but it does not yet have a reserve. So we cannot stop and retreat. I started out my remarks by saying the trust fund was on the path to solvency because it's not there yet. The fund will formally reach solvency only when it builds up a level of revenue and of reserve sufficient to meet UI benefit requirements in a future turndown. So we've got a ways to go yet, and we need to continue our current strategy. But there is no denying our progress. Much like the $82.5 million deposit we made recently into the Kentucky Rainy Day Fund, the paying off of our UI debt to the federal government is an undeniable sign that Kentucky is back, and it's back with a vengeance. Our families should be confident that our economy has momentum, that our financial strategies are sound, and that if through no fault of their own, they lose their jobs and they fall on hard times, we'll be there to help them through their struggle. Thank you very much. I want to ask several people to come up and say a few words. And first, a fellow that helped lead this charge out of the General Assembly, and that is Representative Larry Clark. Larry.
Thank you, Kevin. Thank you, Governor. I'll be very brief. But first of all, Governor, I want to thank you for allowing me to serve on the task force. I would secondly like to thank both labor and management for both of them putting skin in the game and recognize we have a problem and come up with shared responsibility, especially my labor friends that have a difficult time understanding that. And I would also like to thank Senator David Givens. He and I were this far apart when we started, and not only that we worked together, but I can truly say that I respect Senator Givens, and I call him a personal friend.
Thank you.
Lastly, I would like to thank Secretary Mountjoy that was here at the time that helped with that, and Secretary Joe Myers that put it together. But, Governor, it's a combination of things. Your vision to put us together to try to solve the problem. But without a doubt, changing the economic development 2009 and your tireless energy to bring more and more jobs to Kentucky, good-paying jobs, was the second part of this that made us come here today. And I want to personally thank you and thank you all for having me here today.
Senator Givens?
Governor, thank you very much. And let me send President Stivers' regrets and share those with the audience that he couldn't be here today. And I want to reflect for just a moment on the work that we did. And Representative Clark, thank you for your kind words. Very much. I appreciate those. Representative Clark indicated what an honor it was for the governor to assign him to be on the task force. And at the time that I was assigned, Governor, I didn't know if it was an honor or not, because it was a very complex issue. Lots of moving pieces, lots of variables in the mix. And we had a looming crisis, a true looming crisis, as the governor said. That work in 2010, that summer of 2009, that work in the session of 2010, and then revisiting the question in 2012 really inspired in me a hope in the legislative process and that government can work for good, especially when challenged in a big, big way. The credit for the celebration we're here today to celebrate goes to businesses. Our people that are hiring and creating jobs and paying into the UI Trust Fund have caused the lines to move in the direction that you see here. So for the things we appropriately celebrate that we've achieved, we've got to hold up and laud our businesses for the hirings that are going on. That's so vital. Lastly, I can't pass up the opportunity to say, while we're here celebrating this achievement, let's look at the next challenge that lies ahead, and that challenge is a workforce training and workforce development challenge that's very, very real. We have employers today that are struggling to find the skilled, quality workers that they need to continue these lines moving in the right directions. Last year I had the honor of sponsoring Senate Concurrent Resolution 103. It passed unanimously out of the Senate, saying let's take a broad look at workforce development and workforce training and how we spend $900 million of state and federal money annually in Kentucky for workforce. Sadly, it didn't complete the journey, but I'm hopeful that whoever the next governor is, that administration will make it a priority that we have the most skilled and most able and most ready workforce in the United States. Thank you.
And Senator, you're right. That is our next challenge. And I remember about 5 years ago in the recession, our challenge was employers telling us, I know that we've got people unemployed, but we don't have any jobs. And now that's flip-flopped. Now we have employers every day telling us, Governor, we've got all these jobs and we can't find people to fill them. I like this latter challenge much better than the former one. But what it does tell us is that we have to get into this worker training in a big way and gear it toward the jobs that are out there and the jobs that are going to be out there in the next few years. Next, let me call upon the Speaker of the House, Greg Stumbo.
Well, thank you, Governor. I can't take the podium without sharing a story with you, and I don't know if you remember or not, but I recall when we discussed this crisis, I'd just become Speaker, and we were talking about issues that were confronting the state, and you were telling me the enormity and the complexity of this, and your question was, who should I get to chair the task force from the House side? And I said, well, you probably need the toughest little SOB that I know. Now, that doesn't mean what you think it does. It meant supporter of Beshear. And I said, Larry Clark is the man for the job. And sure enough, he was, and sure enough, they came together, did something quite remarkable in solving the problem, much like we did, Governor, when you put people together to solve the pension reform issue with KERS, much like you're trying to do now, putting people together to solve the problem that we have with the teachers' retirement system. So I've got to credit my colleague, Representative Clark, who was Speaker Pro Tem at the time, my colleagues in the House who participated. I got the opportunity to be a co-sponsor of that bill and was proud of that. But I want to thank Steve Beshear for all the things that he's done in very, very, very hard economic times through his administration to bring Kentuckians together, focus on the problems, and create solutions. So thank you, Governor. Thank all of you who participated, and God bless you.
Next, Dave Atkinson, Kentucky Chamber.
Thank you, Governor.
May the record show that the Speaker called Representative Clark an SOB
And clarified it.
and got away with it.
That's not the first time.
I didn't know it was to your face, though.
I knew him before Beshear became governor.
I'm Dave Atkinson with the Kentucky Chamber of Commerce and proud to represent over 60,000 employers in this state. And this is a big deal. Saving $165 million or $105 per employee will affect in a positive way virtually every employer in the state of Kentucky. And it was done with a bipartisan effort. You know, Governor, we admire that instinct in you to pull folks together from the different parties and all different sectors of the economy to get things done. You've done that time and time again on tough issues in this state. And it has worked, and we even have a price tag to put on that cooperative effort on this particular round. I want to thank my colleagues, Greg Higdon with the Kentucky Association of Manufacturers, Gay Dwyer with the Retail Federation, who were at the table with others of us. I admire how they worked and how studiously they got involved in the numbers. It was a complex issue. And even after the group had kind of debated the thing and argued and finally come up with these recommendations, we had legislative battles, or challenges, battles. And Representative Clark, who worked tirelessly through the process, and by the way, he'd call me at night and say, you got to stay at the table, you got to stay at the table. He was talking to both sides, keeping us at the table. He did a terrific job in the House, and then Senator Givens, not only in that session, but the subsequent session in which the reform was tweaked a little. Thank you for your leadership in that regard, too. I want to also thank the National Federation of Independent Business because they were a big part of it as we tried to hammer out these points. The last point I would make, and it echoes something the governor said, we've got to stay the course. We can't just walk away and say, hey, we fixed it, now we're done. We've got to aggressively manage this and monitor it to make sure that it continues to work for unemployed individuals in our state, but also for employers. So thanks very much, Governor, for helping get this thing resolved and for allowing me to be a part of it. Thank you.
Okay, questions?
Governor, I think you said Kentucky was one of 30 states that had
Believe
to
so.
borrow money. Any idea how many have paid those back? Is Kentucky one of the first to have paid that back?
Many states have paid it back. I think we've been an expert in the room. Manoj, do you know how many still have an outstanding balance?
On the surface, it looks like only 6 do, but actually it's many more than that. Because we're one of the few states that didn't bond it out. States like Texas, Michigan, Idaho, they still owe a lot of money, but it doesn't show up on the books because
They issued bonds to
10-year bonds.
pay off the loan to the federal
They're
government.
still in the hawk for that, but,
Okay.
We can get that number if you need specific.
Governor, can I inject something?
Yeah.
I think we're 7 years early in paying this debt off. I think our projection was like 2022. Somebody can correct me. We done it in 2015.
The fact that I think you mentioned that it's not entirely solvent yet, that's like a different definition. Does that have any impact on businesses, or is it just the fact that the loan's paid off and therefore their taxes?
You know, the rates and everything now will stay the same as they are at the moment. for the foreseeable future. And I think the point that we are making is that we have paid the loan off. And so there are no more things that kick in on us because we paid the loan off. But we want to make sure that we build the fund up sufficiently so that if and when we do have another downturn, and you always have another downturn, that our fund will have sufficient funds in it that we won't find ourselves in the same position as we found ourselves in 2009.
And is the main reason that it's fixed now, or this has a positive balance now, is because the unemployment rate has gone down so much?
Well, it's because we changed the benefit structure, we changed the rate structure, and then obviously the claims have fallen as the economy has picked up. So all of those things in combination have created the positive balance that we have now. Is that accurate? I'm looking at the experts back here.
Has a figure been put on what would be sufficient? You talked about need sufficient funds for the future. Have y'all put a dollar figure on that? What would be needed?
I don't know that there's a dollar figure, but I think as a collective group, we need to be constantly talking about that and making sure that we don't make any rash moves until everybody feels comfortable that we've reached a point to where we feel we're covered. Anybody else? Okay, thank you all. Oh, was there one more?
I'm sorry, I know I think the budget numbers for July came out today. Have you had a chance to look at those? What were you encouraged by those? I think the numbers were up 4% over last year.
Obviously, we are encouraged by that. It's just another indication that this economy is taking off. It continues to build every year, every month. And, that unemployment rate is holding steady at 5.1%, it appears. That is lower than the national average. We've been there now for several months. And it just tells us that we've got this state moving in the right direction economically. Let's just keep fueling that growth. Okay, thank you.
Good job. Excellent.